Good morning and welcome everyone to the Ultimate Trading Webinar for Beginners. My name is Danny and I will give you the webinar today. The beginning will be more of an introduction to the company, to AvaTrade, what services we have here in this facility, and basically the function of the menus here to the left. We're not going to go through all of them, but the important ones. The second part will be more practical, and we will go through the basic fundamentals for trading in terms of what we see in the panel here, how to design a position, what's the logic behind certain things we see here, value, leverage, spread, margin impact. We're going to speak about all of them, and we will also understand how to use the pending orders here underneath. We can have a third part if we will cover the necessary things in our time, so the spare time can be to the favor of analysis, nothing too crazy, just again to get more familiar with different techniques. And all right, it's important to know that any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or a suggestion. And the last thing that I would like to add is that this webinar is recorded. It's recorded and it's allowing you guys to review it again in your own pace anytime through our YouTube channel. And not only this webinar, but a lot of useful content in our YouTube channel, videos about analysis, videos about risk money management, and it's for you guys to enjoy. So I suggest you will also check that out. We will get ourselves a nice notepad to jot down the notes. Okay, and as I said, we are going to begin with an introduction. So as many of you know, AvaTrade exists since 2006. We have 9 licenses worldwide. If you got a question or a query, you can address the customer service here at the bottom left through the chat or the WhatsApp. Besides that, if you're using a different interface, obviously you're not going to see the button here. So you can contact customer service directly at cs@avatrade.com. What if I have a question regarding trading? Since I'm a beginner and I'm not really sure how to do everything, so I have a senior account manager that can be assigned on my profile and to give me full support through my process with education and with trading inputs and maybe analysis and everything under the trading umbrella. My go-to person is the senior account manager, which can be assigned automatically or via a request with via customer service. Okay, besides that, the interface that we are looking at is called a web trader, and we will use that for the rest of our webinar. It's also on the on your phone, and on the phone it's called the AvaTrade's trading app. Okay, this is what we are going to proceed with, so we're just going to push it down, and at the top we're going to mention the regular platforms we have, which is MetaTrader 4, MetaTrader 5, Ava Options, Ava Futures, and Ava Social. Now, I'm going to say a few words about Ava Social since it makes sense. This is a webinar for beginners, and Ava Social is very useful for beginners, and I will explain you why. When using Ava Social, you have the ability, it looks a bit different obviously than the platform we're seeing now, but in Ava Social, when you download the app, and you will see lists of traders which you can pick from, and you can choose another trader to follow or to copy. Follow means that I'm going to get messages such as signals from the positions that my trader has is traded. So that means trader A, okay. That means that if I'm trader A and I'm following trader B, that means that whatever trader B does, I'm going to get notifications and I can also trade the same way. But there will be no positions running automatically on my account. That's following, okay? If I copy, as an example, okay, so now let's speak about copying. If I copy again I'm trader A, I'm copying trader B, that means that the positions will run automatically on my account, and my account will trade as my trader will trade. Okay, the advantage using with Avasocial is, at least in my opinion, is very useful, and we can customize the lot size. We can still copy the strategy as it is. We can copy the same strategy. The account will take the same positions, but we can request through the app. It's difficult to explain it here, but we can request on the app to have a lower lot size. Okay, so strategy will copy the same way, but the lot size can be minimal. It's excellent to test strategies and to see if this is something you want to go ahead with or not. Of course, we can also follow someone and then to copy someone if you really want to do some research before carrying choosing some trader to copy. All right. The app itself is free to download, so I suggest to check it out, even if you're a beginner and even if you're intermediate or advanced, since following and copying is just a very useful feature to have. Yeah. Okay, so we're going to carry on, as I said, with the web trader. At the moment, we're going to begin with the menus we have here at the left side. At the top, I can find my personal information. Trade is where we are at right now. I'm going to teach you guys a nice trick how to get back to here in case you are anywhere else on the website. So let's suppose that we are here as an example, and we want to go back to the chart. Okay, and I want to get back to the trade. So I can do it in two ways. One, to click on trade, or to just click on the icon here, and we are back. If I'll go further down, we have here the positions, orders, history, and signals. I would like to stay on signals for a moment to explain how it's built. You can see that this icon here also pops next to the symbols names here in blue. And that also means that those instrument here has a signal currently. And if I will, if I'll choose something, just it doesn't really matter, Aussie Canadian as an example. So we're going to click it, and what will happen is we have the signals here to the right, and then I can click on the arrows to expand, and I can see some analysis here. We have something called resistance and support. Okay, we still haven't learned what they are, but we're going to mention them in a moment. We also have here, let's see, TP and SL, okay, for take profit and stop loss, and we have the analysis here. Of course, we're going to break it down and see how to make it useful. Okay, but in theory, if I don't want to do any analysis, I can just select one of the scenarios that make sense. At the moment, it seems like in a buy type, click buy, and I'm ready to go. Meaning that I have a designed position based on the signal with support and resistance, and I can just click here buy and launch the signal. So 2 clicks away, and I am good to go with the signal. However, this is not the best, the only way that I can use it. Okay, I'm going to show you another way to use it. Instead of here from the outside, we can go onto the signal section. And in the signal section, we have here categories which you can choose from. So if at the moment I want to focus on, let's say, commodities, and let's say maybe, okay, so let's speak about this lines here just a moment. Okay, so we will understand why it looks different. Okay, so the lines here, as you can see, there are no stop loss and take profit. That means that if I'm going to use this signal, okay, let's take corn view signal, it's not going to let me use the signal, okay, because the market has already reached a key level. And if I will try to choose a scenario, if it's in a sell as an example, it's not going to let me have the same setup as I showed you previously. Okay, now what does that mean? It means that those signals are based on a certain price, such as, let's say, gold, And if I'll click on view signal, then I have the data here, the analysis. And since this is a valid signal, we also get take profit and stop loss. Okay, then I can expand and I can further do my analysis and proceed to take a position. Now, let's speak a little bit about what's happening here. Okay, so we said that the signal is based on a certain entry, a certain base price, that from that we think about the scenario, if it's a buy or a sell. And as you can see here, the take profit will be the resistance and the stop loss will be the support. Now, as you can see here, at the moment, we have, we're still very close to the base price, okay? And this is why the valid is still signal. The signal that we watched with the corn has already passed the analysis that was on it, okay? So at the moment, I can still use gold, and if I'll click here buy, I do get take profit and stop loss. Okay, let's speak a little bit about what stop loss, take profit and stop loss are. Basically, take profit is a pending order. Same apply with stop loss. So we have two types of orders. We have market execution and we have pending orders. Okay, pending buy and sell, and we have pending take profit. Okay, we don't need the pending since we know that there are pending orders. Okay, what does that mean? It means that I can set the price that will close my position automatically with the profit. This stop loss is going to stop my position with a loss. Now, what I can do is I can design the position as I find right, and it will stop if it gets to the price that I choose. Okay, and we can see at the moment, that the possible profit and possible loss displayed based on the take profit and stop loss. Okay, so in this hypothetical scenario, if it gets to 29.50, we're going to make 40. If it gets to the stop loss, we're going to lose potentially 100. Now, if I put the ratio we have here aside, this is how I can use the signal. Okay, I can click on the view signal, expand the chart. Let's maybe this time go with a sell. Okay, and then we can see the ratio of what we have, the take profit and the stop loss. Important thing to know, when I'm with the buy, okay, I did it and it resets the number for the signal, but this is just a general explanation to emphasize the situation so it will be easier to understand. In a buy, the value for the take profit needs to be higher. Since to make profit with a buy, the value needs to increase. Okay, when I buy, I want the value to get higher, higher, and the higher it gets, just a second, excuse me. The higher it gets, the more I will make. Okay, that means that to stop the position with the loss, I need a lower value. Since the lower it gets, the more I will lose, potentially lose. Okay, with a sell, the scenario is the opposite. So when I sell, my intention is that the value will decrease. Therefore, my take profit needs to be in a lower point, and the stop loss needs to be in a higher point. Why? Because in a sell, if it gets higher, we will lose more. Okay, the more it gets higher, the more we will lose. Okay. Now, the signal does this for us. The signal does this for us automatically, as we saw. Okay, and we've learned that there are different signals. There are signals, as you can see, this is another example. You see signals that are valid still. The analysis is still useful. And if we click, it opens the analysis. We can expand the chart. We can choose a scenario, and we're good to go. Okay, another thing that we can do is we can change the lot size. If we are unhappy with the possible profit or loss, maybe we would like to increase it a little bit. Let's maybe extend it to 0.5, okay? And we can see the possible profit and loss changed accordingly. Okay, of course, we can also customize the take profit and the stop loss as we want, but that is something else that I don't want to delay about it at the moment. Okay, the important point for this explanation is that our signal that looks like this are no longer useful, and the signal that are valid, just very easy to use. Okay, you can click buy or sell, and again, we're good to go. Okay, three clicks away, and I can adjust and modify whatever I want in this panel according to what I'm planning to make. Okay, so we can carry on. As you can see, the signals are not made by us, by Evitrade. There is a third-party vendor called Trading Central, which provides us with the analysis. And as you can see, one last thing, this is the production time. So this is the newest signal. And if I'll scroll down, this is the oldest, right? At the bottom of the list. Of course, the older it gets, the analysis becomes no longer useful. All right, if I'll go down here to news, and this is, again, one last thing, this is considered technical analysis. Okay, whatever analysis I get from the chart, there are two types of analysis: technical and fundamental. Technical. Okay, this was technical analysis. What if we would like to know a little bit about what's happening around the market and to know better with what's happening with the news, not just the charts? Okay, so we can go down to news. And in the news, similarly, we have different categories. And through those categories, we can see, let's maybe say that we focus more on indices. Okay, and then I have an article here, the pre-Asia market brief. And at the bottom of the, if I'll scroll down, you can see there are more to read. And at the bottom of this, we also have the related instruments. So if I'll click here on the 4 related instruments, we can see the instruments that are related to this article, and it might be useful for the analysis might be used for. Okay, that means if I'll go through the article here, those assets might be related with analysis, and I can use it to better design my strategy. Okay, now the next thing that I'm going to show you is the economy calendar. Now this is called, this is what I wrote here. This is fundamental analysis. Okay, technical analysis is what we get from the chart: averages, levels, support and resistance, numbers. Okay, all this under the technical umbrella. Fundamental analysis will be what's driving the what's making it move behind the scenes. Could be anything from governmental decisions, reports, any significant economic change, employment rate, really anything outside the chart that caused the market to move is under fundamental analysis. So this is very useful. Under this, I can also show you the economy calendar. There are different things here as well, but let's go through Market Buzz just a moment, since it's very, very useful to find some inspiration what to analyze. Sometimes we give it a moment. Excellent. And as you can see, this can be designed in 2 ways: bubbles or table, for the people who prefer it with a list. Okay, let's go to back to bubbles. And in this bubble mode, we can see Apple is right in the middle. Obviously, this is based on the number of mentions that the instrument has. So the bigger, the more mentions that it has, the bigger the circle will be. And now, if I'll focus on what's in the middle, which is Apple, so we're going to click it. And now we have all kinds of measurements. We have here the mentioned sources. We have here the overall mentions. We also have here the difference in movements that took place. And in here, we have all the articles, the fundamental analysis, and we can also choose a specific topic. So let's suppose I want to trade Apple. I saw, okay, there are mentions. Maybe there is something interesting going on and worth for me to read. Okay, but I don't want to go through all of that. It seems irrelevant. I only want to focus on the product release. Okay, so then I can click, filter it out, and read specifically on what I want. Again, I find it very, very useful. It helps me focus my analysis and save time. And it's for you guys to enjoy. Okay, there are also filters here. All right, and I can go back and just use it as I want. Okay, now the next thing that I would like to show you is the economic calendar. As I've explained, the articles and the news and the mentions are great, but we can also see official economical changes, which can be defined by how significant the impact on the market will be. So if, for instance, we're going to take the okay, let's filter that out first, because we're seeing a lot of things. We're seeing the yen, we're seeing the ZAR, we're seeing the Aussie. But what if I don't want to see all of that, because I'm not trading all of that? Let's suppose that I'm mainly focusing on the maybe the Aussie and the pound. Okay. All right. So I click here on the box. When I do that, it just showing me only what I selected. Okay. And as you can see, it's a bit difficult to show you now. It's showing us only today, and obviously all those events already took place, all those reports. Okay, and I want to see what's coming next. So I'm clicking on the 19th and then on 26th, and we can see that this area here is a bit gray, right? Look at the line here separating the previous articles to the upcoming article, the reports. Okay, and we can see that this white is a little brighter than the events, the reports we have here. Okay, and what I said is we have different levels of reports. So the employment change is defined high, okay, high impact. We have here the part-time employment change defined by low. CBI industrial trends order is medium. Okay, but again, what if I don't want to see all of that, because I only want to see major events specifically, and maybe I only want to see the Aussie, only the Aussie. I don't want to see the pound, so I'm gonna unselect this. And now I get only the Aussie and only the high impact events. And we can see that in this panel, we have five icons that can take me to further do analysis. The impact, okay, sometimes it's taking a moment. The volatility, in here the price chart, event chart, and add to calendar. Okay, now what does that mean, add to calendar? It means that instead of me remembering when this will take place and what was the previous and what was the forecast, I can just click on add to calendar and add it to my calendar. Now, the structure of the economic calendar in here is very, very simple. Previous is the previous result, forecast is what we anticipated will happen, and the actual will only be displayed after the report took place, right? After the event took place. And importance is what we spoke about. At the moment, we're seeing only high impact. We can make it low only. Then I click and I click again here. And now I'm seeing only low. To reset everything is just by clicking here on the reset. And to reset the days, again, very simple. Just click on the date and we are back to default. Okay, and here I can also search if I want a particular event. Okay. Yeah, this is basically the end of the first segment. Are there any questions, guys, about anything that I have explained so far? The economic calendar or the signals or anything that I said or showed so far? Excellent. So we can begin the second part. Again, let's bring up our notepad. And in our notepad, we can get rid of everything here. We need to find ourselves an instrument first. So I'm going to click here on the Ava trade, and we're back to the default screen. We're going to expand the chart. Maybe let's find an instrument first and then we'll do it. Of course, another way, if I would already know what instrument I'm going to trade, I can just type here and select it from the list. Okay, but since I want some inspiration and to find it manually, I can find it here in the lists. Okay, and in this lists with categories, we can see that down here we have Forex indices, cryptos, and commodities. Maybe we can go with, we also have stocks, ETFs, and bonds, but this is irrelevant at the moment because the market is not open yet. Okay, we can go with maybe with energies and maybe with oil. Okay, maybe crude oil. Okay, let's go with maybe just open the chart first, and in here on the two arrows to expand the chart all the way up. And at the moment to design the position, we need to click buy or sell, and we have it. We can change what we want. It doesn't make any difference what I choose here because I can change it in here. Okay, but before we carry on, I would like to have a nice guide through about the panel here, the toolbar, so we would know how to use it and what each button is doing. Okay, so in here, this is the search field. We saw that we can erase and put down whatever we were looking for. In here, we have the time frames, and at the moment, it's on day D1. If I'll scroll up, I'll see there are different segments. This one for minutes, this one for hours, days, weeks, and months. Let's keep it at days for now. We can, in here, we can change the way that the chart is displayed. Okay, if it's bars or a line or a candle, candlesticks, and in here we can enable the crosshair. As you can see at the moment, we get no information from the candles when we're hovering with our hand across the chart. Yeah, there is no data coming from the candles. Okay, so if we click here on the arrow and then click from no crosshair to crosshair, then we do get the numbers. Okay, as you can see, we are on daily. So now this is today, this is yesterday, the 18th, 17th, 16th, weekend, and so on. Okay, and then if we carry on another one, we can split the chart. At the moment, we've got one chart, but what if I want to see 2 or 3 or 4 simultaneously? I can click here and better design the overview that I want. And I can, of course, change. We have a lot of oil here. And I can change specifically the instrument that I want from those 4 simply by clicking here on the chart that I would like to change. Let's say that I would like to change the upper right. I'm going to click it, and with this blue rectangle, I can simply, we can see that it's selected, and I can set whatever I want. Let's say gold. I'm going to click on gold. You can see that it's changed. In here, we can also set it to be something else like this. And there is a question here from Prashant. Prashant, can you speak Hindi? I wish I could. I'm at the moment. I don't speak Hindi, but I would recommend you to see the recording in our YouTube channel, because on the YouTube you can translate. You can get subtitles and translate I don't want to make any guarantees if you can do it with Hindi, but I guess we're 2025, so it should be doable. I hope it helps. Okay, so we can clearly see it's very easy to utilize the interface in here. We can choose the number of charts and we can select the charts and change them to what we want. But let's go back to oil, okay? And we will, there are two more things here. We have the indicators and we have the lines here, but we're gonna speak about it anyway, so there's really no point delay about it now. Okay, so at the moment, as we can see, the default with lot size is 0.1. What does that mean? It means that we have 100 barrels. Okay, let's set one lot, which is what we have here. Okay, one lot is 1,000 barrels. Okay, and we will in a moment understand the meaning of this this number here. Okay, as you can see here, we have two menus. We have the order entry and the instrument details. In the instrument details, we can naturally find all the instrument details. All right, the times that it's operating, the swap, the spread, the leverage, and the margin. Okay, and all the necessary information for this instrument. Okay, and in here, we're going to change to one lot. We can see that one lot means 1,000 barrels. Okay, what does that mean exactly? It means that now every dollar on the chart, just a second. Okay, every dollar on the chart will equal to $1,000. Let's see together. Okay, since we are with a buy, I'm writing down the buy price. Okay, and as you can see, we have 1,000 barrels for one lot. That means that now, if we spoke about that with a buy, our intention is that the value will increase, right? So that means that at the moment, if I will set it hypothetically for, let's say, $5 higher, so we're going to make it $5, 77.46. Okay, if it's $5 higher and we are with 1,000, so naturally I should make on this position 5,000. Okay, again, I will explain how so, because there is a question here, just a second. Please, I want to know if the signals are generated of the analysis done by human, how sugar is traded. Oh, those are excellent questions, but I'm not sure that I can answer those questions since I don't know. I frankly don't know. As I showed you, the trading central is providing the signals and not us. Okay, now as you can see, since we have 1,000 barrels and we are $5 away from our entry, that means that we can make $5,000. Okay, what if we would have 10% of a lot? Okay, that will be 100 barrels. Let's see, 0.1, and now each dollar will worth 100. Again, since the entry here, hypothetically buying now in market execution 72 and selling at 77, okay, closing the position, that means that we can make 500. If we break it down to 0.01, that means we have 10 barrels. And now each dollar on the chart will be 10 barrels. So if, for instance, I would like to design the position based on the profit, I can change the lot size accordingly to what I would like to make. But how much we would like to make? Let's see. We need to set the target. This way we can better design the position, to set the take profit and the stop loss, and to know what price to expect. So the profit excellent. So let's set the target of, let's say, $1,000, or maybe let's go a little lower, $500, and think about a reasonable time for me to hold this position. Since $500 might be a good amount to make on the position, but that depends how long I should sustain it. What if I need to hold this position 1 year? 1 year, $500. What do you say, guys? Is that a good amount to make? I'll break it down to months. $500 a year comes down to 41 a month. And if I'll break it down to 4 weeks, it comes down to $10 a week. Not that great. Okay, so I need to think of a reasonable time to make this 500. What about a month? Yeah, if I make it in a month, is that good? Maybe, but not enough. So I think holding a position for a week to make $500 is not bad. Okay, again, everybody can do whatever they want, but I'm just showing here an example. So besides choosing the target, besides choosing the time length, then the following thing that I would like to find is obviously our movements. Okay, price difference. Okay, why do I need to know that? Because at the moment we can see that 77, if I look statistically at the time, the last time that it's been on that price was 20 of January. Yeah, that was long ago, right? It was not a week ago, but more looked like a month ago. Okay, so in this case, if it's too far away, I need to know what a realistic movement we expect that crude oil can get to within a week. Okay, so the first thing that I would like to do is to change it to weeks. Okay, just to see the analysis here. And okay, let's set some, hopefully some guidelines, so we will know where we are, and then we can think of a reasonable levels to target. Okay, at the moment I'm not doing anything crazy, I'm just setting support and resistance similarly to the signals. If you remember, we had those same support and resistance on the signals. This way we can better design the levels that we expect to take place. Okay, and now we can see how realistic those levels are. Since we are with a buy, our intention is that the value will increase. We're also going to mark the recent resistance. So again, to simplify what I said earlier, levels higher than the current price on edge points such as 80.75 will be called resistance, and levels underneath will be called support, as you can see, such as 65.22. Okay, and those will be resistance that are center between the current resistance 73 to the highest resistance. There are higher levels here, but they are far away and they are older, much older than a week ago, so I'm not really bothered by that. And okay, now how can we see that those levels that we jot down here are realistic? Yes, of course, Lily. I said in the beginning, this webinar is recorded. I am aware that the speed that we are having it might not be suitable for everyone, and sometimes we need to have a recap. So of course, this can be found on our YouTube channel. Don't worry. Okay, and okay, with this in mind, I would like to target 73 as an example, or maybe even 75. Let's make it slightly lower than this resistance, make it 75, and the actual resistance is a little higher than that. Okay, 10 cents higher than that. So this will be a green line. Now, in this green line, I don't know the exact date when this recording will be available. Usually it's at the end of it's on the same day, but I cannot guarantee that because it's out of my hands. Okay, but I am sure it will be either today or tomorrow. I hope so. All right, now with this in mind, as we said, we will target 75. 75 is approximately $2.50 away from where we are right now. Let's click on execute when price hits. As you saw in the beginning, we have market execution orders and we have pending pending orders. Pending orders are staying on the chart, allowing us to choose a price which will automatically open and close. Now, if I'll set this 72.5 to bound this entry to that price, okay, and then I can target take profit. I can target 75. I can target 75. Now, I need a way to know that this is really in the range, because it seems like, let's see, 1, 2, 3 weeks ago, okay, 3 weeks ago, it was higher than, oh, sorry, 1, 2, 3, 4. 4. This is the only scenario that it was higher than 75. It did try a couple of times. Let's go back just a second. Don't worry, guys. This is really not anything complicated, but I feel that if I'm not going to show you that, it will be difficult to understand what I did here. Okay. I really hope that this will make sense. As you can see, crude oil already a couple of times went through those levels. Okay, it's a bit difficult to see from the weekly chart. Okay, but you can see that those candles show us that crude oil reversed, okay, and couldn't get to the necessary level, the 75. It tried a couple of times, but it couldn't get any higher. It kept being bearish, right? So now I have a reason to believe that if it passes that level, it can proceed even higher to 75. I'm not sure it's going to pass that and get to the next level. Next level is a little lower than that. Let's make it a little lower. Okay, but I have a reason to believe it might be here in between. Now, in which way I can confirm if this is realistic or not and 75 is in my range or not? I can do it in two ways. One is I can compare the previous levels as I did, and I can go candle by candle and check the levels. The second thing that I can do is to apply an indicator that measures the average based on the number of candles. So I'm going to click on AVE, set an E, and then click here and drag it to the right. And in here, we have the length, which we can choose. At the moment, the reference displayed on the chart is weeks, so this 14 will be weeks. What if I want to analyze, let's say, 3 months? Okay, so I can change it to 12 and then click here Save. Okay, now we can see that the ATR, the average true range, is almost $4. So from the entry 72.5 to the take profit, we have $2.50. $2.50 are lower than the average true range. Okay, again, briefly, the average true range is giving us an average number to oil moving per week based on the 12 candles we saw previously. This number can be changed, and the ATR will change accordingly to the number of candles we will choose. That depends how far we would like to go. Okay, so in the movements here, we're going to write ATR equals 39728. And of course, $2.50 is actual targeted price. Okay, and we know that it's in the range. It's much lower than the ATR. Of course, we know that it's in the range. Now, after I validate the number, I would like to know how many barrels I need to get to 500. Since 2.5 with the minimum is only getting us 25. and we're not looking for 25. We want to make 500. Okay, so what I can do is I can simply divide by my target by the movements, and then I'll find the units. Therefore, if I'll take this 500 divided by 2.5, who can tell me how much is that? I'm gonna give you guys 5 seconds to answer. Okay, how much is 500 divided by 2.5? Okay, let's do it together. 200. Okay, 200 barrels. And now, if I'll erase the 10 we have here, and I'll write 200, okay, we can see that now the take profit is like we want, right? We targeted 75, we can make 500. Great, great. Now we can use the same reference for the other way around. And instead of targeting 75, which is in a buy scenario, the take profit, we can reduce 2.5 from the current price to set the stop loss. Okay, as we said in the beginning, in a buy scenario, the take profit needs to be higher and the stop loss needs to be lower than the value. Since as long as it keeps going farther down, the more we will lose. Okay, great. At the moment, let's recap. Let's understand what we did here. So in the beginning, we roughly saw the chart. We saw that there is a potential bullish movement. We set some levels, support and resistance. Very good. And based on that, we also targeted a certain level to close our position. Now, to validate that this is a realistic number and I didn't just picked it randomly, we also attached the average true range. The average true range is measuring the past, the number that is displayed here, and is giving us the average movement for the weeks. If this would have been days, so the average displayed would be the average per day. If this would have been month, it would be the average per month. Okay, how much oil is moving every month. Okay, and again, the length is something that I can change, and I should change if I see an exceptional movement. Okay, for instance, at the moment there isn't anything too crazy here. Okay, but if you find exceptional candle or gaps or anything that you want to exclude, what you can do is click here on indicators, click here on the settings, and define it to the number of candles you want to go back. Okay, so starting from here, 1, 2, 3, 4, 5, 6, 7, 8, and the rest. Okay, now let's finish the composition here. As we can see, the ratio that we're having now is 1 to 1. In other words, we can make or lose the same amount. Now, let's suppose that I'm not really happy with this ratio of 1 to 1, and I would like to design the position to make 500, but the maximum loss that I would like to have is 250. Okay, so the take profit set to 75, the stop loss is set to 70. At the moment, this can lead us to 500 and 500, which will be 5% of the account. Okay, how can I know that? Because, just a second. Okay, now, what if we would like to, how can I adjust the loss to be 2.5 from 5, okay, while maintaining our profit? So the easiest way that I can do it is just to get the stop loss closer to the entry. Again, I'm not talking about analysis if it's good or not, or if it's too close or not. I'm just demonstrating you here the exercise, and you can better customize it later on to your needs. Okay, so since this is $2.50 away, okay, the stop loss is $2.50 away, we can take this reference 2.5 and cut it by half. And now, if we subtract instead of 2.5 from the current price, 125, let's do it like this. So we get 71.25. So if I set 71.25, it takes my take profit by half, reduces the stop loss by the possible loss by half. Again, we'll recap only the last part. What we had before is this. And with a ratio of 1:1, if I would like to lower the loss and maintain the profit, I can get the stop loss closer to the entry. Closer it gets, the lower, the less we can lose. You see, if I keep clicking here, I click and I click and I click, and it goes down and down. Now, an easiest, more simple way to do it is to simply cut the difference between the entry to the stop loss by half. So now we are $2.50 away. So we can make it 125. Okay, we took the difference we're expecting, took it by 5. We can of course take it even higher, or we can extend it even lower. Okay, but again, I'm just showing you here some nice exercise. Okay, and at the moment, if we make it like this comes down to 2.5, no longer 5%, but 2.5% of the account. Okay, now the last thing that we would like to do before we take the position is, of course, to know that we can take the position. Meaning, at the moment, we see 200 barrels. 200 barrels cost almost $15,000. How can I know that? Because the price is 72.5, okay, times 200 equals 14,498. Okay, so that means the number of units times the price, giving us that. Okay, now this is the value, right? Okay, and it doesn't mean that this is the amount that I need to open the position. How so? Because we have leverage, and leverage multiplies buying and selling. Okay, it means that it's giving us the ability to have a bigger position with the same balance. We don't have to remember that since it's written right here. Okay, if you are using this platform, if you are using the web trader, it's written right here. Okay, the leverage is multiplying us. Okay, so if we are multiplied by the leverage, that means that this value here is not what we need. We need to divide this value by our multiplier, and then this is the value that we need. In other words, value divided by leverage equals margin. Just a second, slightly typo here. Okay, equals margin impact. In other words, 14,498 divided by 10 is, okay, excellent. And of course, with 10,000 account, I can easily take it. This will be a little more than 14% of my account, okay, in terms of margin usage. Okay. Now, do you guys have any questions so far about anything that I said, about the equations written here, about numbers written here, about the any questions so far? We still have another 3 minutes, and I would like to explain if something is unclear. There is a question here from Nineo. What determines how long must hold a position for? Should it be based on technical or fundamental analysis? This is an excellent question. What determines is basically the judgment of my judgment, right? The reason that I would like to either hold a position or not hold a position for longer is comparing the levels that I'm aiming for statistically with the time that I want to hold it. In other words, if, for instance, I'm just taking an extreme case here, it's really not okay. If I'll take the peak, $95 dollar for oil per barrel. Okay, let's suppose I target this price. I have my position opened. Okay, somewhere here in here 72, and let's suppose that in a week got a little higher to where we said, roughly around here. Okay, now the actual movement that I need is higher than that, right? Now I need to think if holding this position worth for me or not. And I can also take my account balance as reference. And I can think about my strategy, how much money I'm planning to make, and if it's worth my time. Okay? For instance, if I'm holding the position, I'm only in the green area, and this position, I'm holding it for already beyond a week, already 2 weeks, or even 3 weeks. Okay? But I see that I'm not getting to the number that I want. Let's suppose that we've targeted 95, right? Let's forget about the actual okay? Let's suppose that I'm targeting 95. So I need to think, is it really worth for me to keep holding this position to try and get to 95, or I should close it with a profit? Okay, remember that when your position is opened, you're using your margin. So if the position doesn't fulfill its destination, I might as well say I would like to close it and use my margin for something else. Yeah, and it also works the other way around with a loss. So let's suppose I took a position, God forbid, it went down a bit, not this much, but let's suppose it went down the red area, okay, and my stop loss is, well, here. Again, the other way around. If I'm holding this position for more than a week and it hasn't gotten to my stop loss, and I see that it doesn't also turn around, so now I need to think, if this margin useful for me, okay, should I keep it or should I close it? It depends on my judgment, okay? And other than that, it depends on the analysis, right? I can look at the news and I can see if there is any upcoming thing that will justify my analysis, or I'm very far away. And the analysis that I get only hint me to that it doesn't go as I plan, right? So of course, I will change my strategy accordingly. It's difficult to say. It's difficult to say how long to hold a position, okay? It's very dynamic and based on a strategy. I hope it helps. All right, we are out of time for today, guys. As I said, the webinar will be uploaded to YouTube later on. Yeah, other than that, you're all welcome to join us tomorrow at the live Q&A. It's been a pleasure giving you the webinar today. I wish you all best of luck with trading. Have a fruitful week and have a good day.